Well, good evening, ladies and gentlemen, and thank you for being with me this evening. And it's good morning to our friends on the east coast of Australia. Good afternoon across the ditch to our friends in New Zealand. How's the volume, folks? Would somebody please just type into the question box that you're getting this all right? No? No one yet. 1, 2, 3, 1, 2, 3. Can you hear me? One, two, three, 1, 2, 3. Oh, you did delayed reaction. And now they come, all my friends. Murph, Mark L, Greg Paladini, of course. Sammy, good to have you. So everyone can hear me loud and clear. That's grand. And if you can hear me loud and clear in California, you can hear me pretty well everywhere, I guess. It's a long way away, isn't it? How delightful. Well, we've obviously got a bit of a lag in the video today, but that's fine. You're all here and with us. Well, boy, what a day today. I mean, if you were a short-term trader, you got severely beaten around the head both sides occasionally, but it's a very, very exciting time. Wonderful excitement in the equities, and we're going to talk about all of that as we move along. So here we are. Let's start with that. So, as you know, markets are rational, orderly, and sometimes predictable. And look at the number of people today. We've got a whole lot of people coming in a little bit late here. Albert, good to see you here. Colin, of course, George, Greg, one of our two wealth managers, one of our three wealth managers, actually. Greg's from Colorado Springs and Texas. And, of course, we've got Greg Paladini with us today from California. He's a wealth manager. Very interesting story about him, which I'm going to tell you as we move along. Gig Hilton has just joined us from North Carolina. I hope your property at Myrtle Beach is okay, Gig. You got a hammering over there, reading the newspapers anyway. Anyway, good to have you with us. Joe's with us. Jonathan, of course, Mark, and many other Marks. Let's see, we've got more here. Murph, of course, is with us. Miles is with us. Milton, welcome, Milton. Very glad to have you with us, of course. Nathan, Nick, many Nicks, and let's see here, they're coming in a bit late here. Peter Mack, who's not a day trader. Sammy, good to have you with us. Sean. Todd, Trevor, of course, very important Danielcode member. Grand to have you with us, all of you. If I've missed any of you, welcome. It's great to have you with us today. Okay, so fireworks last night, wasn't it? Wow. And here is an interesting email that arrived today from Greg Paladini, who's with us today. And you can read it for yourselves. Greg's a very interesting client because he joined the Danielcode in 2015, and he did his first tutorial in Los Angeles. I imagine that's where you were, Greg, but my memory fails me in detail now. But 2016, he did a Danielcode tutorial. And he came back last year to do another Danielcode tutorial specifically to learn about trading time, which I wasn't teaching when he did his first tutorial. Greg's a wealth manager, a very, very experienced trader, and he's having so much fun with the Danielcode time signals. And as well as all of that, he's been incredibly generous to us in allowing us to share his journey through the Danielcode tutorial. If you go to the forum page at the Danielcode website, you'll see a forum posting there. The heading is Danielcode training tutorial or something like that. And Greg's documented his travels with us during this current teaching session that he started last year. still going on this year. As always with all of my tutorial clients, my commitment to you is not that I give you X number of sessions. My commitment to you is I'm here to help you as long as the good Lord leaves me on this earth, which God willing will be a long time yet. So I talked to Greg a few weeks ago. He was trading cotton and doing particularly well, and I was able to give him some insights, and he's been kind enough to write to me today telling me just how fabulous his trading is and how powerful the Danielcode time signals are. And he says they are the real deal, and they really are. Most wealth managers and people with formal training in markets, the sad thing is that they view futures as a hedging instrument, and that's all, which is kind of sad, because trading futures far outperforms any investment in stocks and what have you. And Greg was the first to say the trading has been so good that I think that one should be considering full-time trading of futures, not only as a hedge but as a wealth creator. So that's pretty wonderful. And it's good to have Greg with us today, and we're most appreciative of Greg's generosity. It's not something a lot of people would do, but he's been prepared to do it, and I'm sure it's a great help to anyone who's thinking of doing a tutorial. And if you're not thinking of it, you should be. So during the week, we've got a whole lot to cover today, folks. There's drama and price action everywhere. And during the week, I saw a fairly lengthy Bloomberg interview with Jamie Dimon, who's the boss of JP Morgan Chase. And he's a very interesting guy because, of course, he sees everything. He's in a unique position across all of the markets. He's seriously concerned about recession. As he said, Europe is already in recession, and they're likely to put the US in some kind of recession 6 to 9 months from now. Well, technically, the US is already in a recession, but emotionally, it's certainly not. The US consumer's done very well, continues to do well, and when a man like that speaks, one tends to listen. His other big concern, apart from the Federal Reserve, as he says, they were too late to get started. Here we are. According to general definition, 2 consecutive quarters of negative gross domestic product, the US entered a recession in the summer. But I don't think anyone, certainly commentators in the US, are not taking it too seriously yet. Bear markets are slow, unwinding sorts of things until they hit that critical point where it all gets in a huge rush. And I'm sure the Federal Reserve is determined to raise interest rates until inflation starts to moderate from sky-high levels. Well, we got the CPI figures today, and inflation is massive, absolutely massive. And what happened? The equities markets all rallied. So you can be sure I've been telling you continually all year that for a correction, because that's all we're getting so far, this is a very, very modest correction in equities. And I have real trouble believing that it hasn't got further to go. I think it must have further to go. This is just too shallow. There hasn't been enough pain. And of course, remember, pain for other people is joy and delight for us. I long for bear markets because it creates all sorts of drama in the market, and drama causes volatility, and volatility is what fuels the big earnings in futures. And of course, what we're seeing at the moment, it's some absolutely stunning Forex moves. amazing what the new folks in Downing Street in London have managed to do to make the poor old scholastic British economy, trying to give it a burst to bring it out of its stupor, but cause more damage. And we'll talk about that as we go. So what's really interesting is that shipping rates, transport, heavy transport, is having the steepest month-to-month drop recorded. It's comparing February 2020 versus the month before. That's where it all started. And they're having a serious correction here. Inbound volumes to all US ports were down 11% year on year and 12.5% in August. This is fairly old, but it's gone on since then. And this is classical Dow theory, where you're looking for the transports to confirm the trend in the Dow. And it's all pointing that way. I mean, I know markets love to climb a wall of worry, and boy, there's plenty to worry about, isn't there? Have a look at this. This is China's housing market, which Bloomberg covered particularly well. And the IMF devoted one section of its annual report to a discussion of China's housing woes. And you know what the problem is. Declining home sales, lack of access to financing. They're not telling you the real story. The real story is that the growth, the uptick in housing prices in China has been, in the major cities, has been just stunning. It's just parabolic. And that only keeps going as long as you're feeding the hungry beast. And that hungry beast requires massive amounts of financing. And that's where it's been coming undone in China. It's been apparent for a long time. This is not anything new. But it's really telling now. 70% of offshore bonds of developers trade at 40 cents on the dollar or less. And this could spill over into the banking sector, according to the IMF. Undoubtedly it will at one stage or another. And it was an interesting read, and you should be well aware of that. Keep it front of mind. It's a massive market. The war in Ukraine, Jamie Dimon was particularly vocal and clear about the war in Ukraine as being his major worry. And it's something that you need to do some serious thinking about, because if you consider that this whole business with Russia and Ukraine has come about at a totally failed premise. I have no doubt Putin thought that he'd send a tank column up into out of Belarus into Kiev in Ukraine, and that he'd be welcomed, his men would be welcomed with open arms because of its historical connections to Russia. But that wasn't the case. In fact, the Ukrainians weren't happy to see them there at all. And since then, of course, this is effectively a proxy war between Russia and the West. But it really started off as a civil war. This is, front page headlines all the time now. But you have to remember that this all started in 2014. And what happened then was that in the normal elections, Ukraine elected a very, very pro-Russian prime minister and his colleagues. And shortly afterwards, the powers that be, including the usual suspects, I'm sure, started a revolution. And he was hunted out of the country. He had to fly to Moscow, get away from them all, a lot of his colleagues as well. And the pro-Russian government was replaced with a, if you like, a Ukraine independent, free forever type government. But there are parts of Ukraine where that didn't go over well. And the eastern parts of Ukraine, where Russia has now gone in and taken possession of parts of it, they're Russian-speaking people. and they certainly consider themselves Russians. There's a whole significant part of that population in the northeast of Ukraine that are pro-Russian and that consider themselves Russian. So this has really been a civil war since 2014. There have been static trench lines. The Ukraine army's been facing the armies or groups of the insurgents, if you like, supported by Russia in one way or another. And it's been a civil war that's now turned into a proxy war. And it's scary. Russia is one of the world's superpowers. Putin has got to come out of this with something, or he's going to lose his head. That might be the least of the losses. But, when you start thinking about what could be a negotiated position, they're so far apart. And this stuff is history. It's bred into them. And it's not going to be easy for whoever has to sort this out. And it has to be sorted out. It can't go on the way it's going. And, of course, the Secretary of Defense, who's is an Army general in the States, he let the cat out of the bag by saying they're happy early on. He said they're happy to see this war go on and to weaken Russia as much as possible. So I guess the diplomats wouldn't say that, but he's a blunt soldier, and that's what came out. Now, remember, economically, both Russia and Ukraine are massive grain exporters, and corn and wheat, huge sunflower. I think Ukraine's the biggest grower in the world of sunflower, and it exports wheat, corn, barley. According to the European Commission, Ukraine accounts for 10% of the world's wheat market, 15% of the corn market, etc. So it's not insignificant, and it has more than 50% of world trade in the sunflower oil market. Very, very important stuff. And they're not going to get much planting done with the war going on. All the young men are serving in the army. It must have some effect in Russia now that 300,000 young men have been mobilized. And of course, the flip side of that is that Russia is a massive exporter of fertilizer, and Ukraine is going to find it difficult to get their hands on enough fertilizer to keep growing at the rate they have. So they're the little issues that are going on there that are actually big issues, but they never come to mind. So a bumper harvest in Russia in hopes of revived grain trade flows have pushed prices lower. But and let's say the underlying factors are unchanged. The ongoing war is only one of a multitude of problems that could sustain higher hunger rates for many years to come. And it goes on. Storm clouds on the horizon. This is from the Financial Times. The war has undoubtedly been a big drag on global food production, with Ukraine's ports blockaded and capacity on alternative routes limited. Ukraine's now been able to export some of its grains under a modulated program negotiated by Turkey, who's a friend to both of the players in that game. So more and more of these problems everywhere that we don't always think of. And of course, a worry, market climate warmer worry. And that's, I think, what you might see now. But interestingly, this picture you're now seeing, you're probably fairly familiar with it because it's basically the Crimea, which in this particular document is shown as part of the Russian Empire. And this is a report on the Crimean War in 1853, 1856. And what's interesting about that is the Battle of Balaclava involved the British, the French, and other allies on one side, and of course, who were the other side? Russia. And this is 200 odd, almost 200 years ago. So if you're not familiar with the Charge of the Light Brigade, it's a very, very famous feat of arms that involved the British light cavalry, 600, the brave 600, 600 men mounted on 600 of the finest horses in the world, all bred in England and Ireland, taken over to Sevastopol was the main port there, and the charge of the Light Brigade. Well, who were they charging? They're the Russian guns that they're charging. And that, of course, was a monumental failure of intelligence, in the same way that Putin's initial invasion of Ukraine has been a monumental failure of intelligence. No doubt they genuinely believed that the Russians, were going to be welcomed in Ukraine with open arms, and they were not. And in this case, you have the British cavalry making a charge to the wrong place. Lord Lucan, who was up on the heights, Raglan was his ultimate commander, a player from the Waterloo era, fought in Waterloo with the Iron Duke, Wellington. They were up on a very high ridge, and they could see exactly what was happening below, but the guys at ground level, the Light Brigade, they couldn't see what was being shown on the ridge or being visible from the ridge. So they charged in completely the wrong direction. They charged right up a valley into the Russian guns, which was effectively suicide. And it's interesting how history repeats, isn't it, that the charge of the Light Brigade against the Russians was based on a totally false appreciation of the ground where they were charging, and Putin's initial incursion into Ukraine was based on a totally false assumption of whether they'd have a welcome or not. And the charge of the Light Brigade has become famous over the years because Alfred Lord Tennyson was the poet laureate at the time. And he wrote this wonderful, wonderful poem, The Charge of the Light Brigade, half a league, half a league, half a league onward, all in the valley of death, rode the 600. Forward the Light Brigade, charge for the guns, he said. Into the valley of death rode the 600. A wonderful bit of poetry. And it goes on. There's many verses. If you're interested at all, do look up The Charge of the Light Brigade. You'll find it very easily in Google. It's amazing stuff. The dedication to duty. The Light Brigade basically was a reconnaissance and skirmish group. That's what they were trained and equipped for. And through to a total misunderstanding, they charged the heavy cavalry of the Russian army. So you see, history repeats, doesn't it? And that was pretty much the end of the Light Brigade. So what else has been happening? Well, Britain seems to be ruled by the funny farm. For those of you who've been following it, Boris Johnson, one of the greatest vote catchers in Churchill, was rolled by his own party. What was he rolled for? Well, having a few drinks with some of his staff and having a few drinks with some of his political cohorts in his garden behind 10 Downing Street. And what this has really been is the revenge of the media, because the left-wing media, the BBC in particular, hated Boris because of his promotion of Brexit, to which they were totally opposed. And this was a Get Boris movement, and his parliamentary colleagues were silly enough to fall for it. As a result of which Boris was rolled by his own party for things that were made out to be enormous consequence, were actually total nothing, absolute nothing. Yes, I know COVID was going on. Yes, I know that he may not have been properly social distanced, but it all is egg on their face now, because to replace Boris, the rules of the party require the parliamentarians, members, to vote until they reduced the candidates to two, one of whom was Rishi Sunak, who was Boris's chancellor, and a large part of the knife in the back to Boris, and one Liz Truss, who was one of Boris's ministers, and they finished up as the two candidates that went to the members. And the members, there were only 180,000 or thereabouts of them, and as my memory recalls, Liz Truss was elected with less than 80,000 votes from the Conservative Party members. So it's hardly a broad sweep of democracy, is it? And interestingly enough, Liz Truss was very friendly with one of their members called Kwasi. And there's Kwasi there, who's now the Chancellor. There's Liz looking pretty fierce on the other side. And the two of them, they're both Oxford graduates, gone through the traditional political training. And I talked to you about Kwasi at our last webinar. He's a very, very large man. He's also quite a brilliant man. But the first thing he did as Chancellor, which is the British expression for the Treasurer, if you like, he's called the Chancellor of the Exchequer. He's the Treasurer. Is he sacked the Permanent Secretary. And if any of you have ever watched Yes Minister, you'll know of the constant conflict between the political wing and the bureaucratic wing. And of course, permanent secretaries in Britain are a very, very big deal. And the permanent secretary of the Treasury, the most important civil servant in Britain, was sacked. The first thing Kwasi did was sacked him. And him and Liz, who had written a book put together some years ago, very clever people, he is in particular, quite brilliant, they came up with a totally new economic policy, a little bit like MMT, modern monetary theory, which is what Japan's involved in. It's the Looney Tune version of traditional economics. And having sacked the bureaucrat, the head of the department, they went on a tear to bring out all these policies that were going to make Britain great again and get Britain moving. And of course, Britain is mired up to its ears in debt, and the British Bank of England doesn't have quite the same clout as the US Federal Reserve. So the first thing they announced they were going to do was cut out the 49% top tax rate in Britain, but it was to be an unfunded tax cut. And there were a whole lot of other initiatives they announced that themselves were largely unfunded. And the bond market revolted. And there's a particular type of bonds they call gilts in GILTS, long-term bond, they're called gilts. And they are held predominantly by really long-term investors, pension funds in particular. And the pension funds, of course, not content with their investment because they're actually all underfunded. But there's the endless game going on, as it is in other parts of the world, that there's sufficient funding being put aside to pay all these pensions, a lot of which are based on a function of your pay at retirement and multiples of it. And the gilts market went nuts as interest rates went up. This whole idea of what Liz and Kwasi were intending had interest rates rising rapidly. And of course, the first thing that happened is the bottom fell out of the English pound. And on that particular day of drama, it traded at $1.03 US, which is quite extraordinary. Excuse me. And the Bank of England had to step in and say they would buy gilts for a period of time, but they specified the end of that time, which is in 1 or 2 days now, and the gilt market is not happy. We haven't seen any vigilantes in the US bond market. which is interesting because the power of the US Fed is highly respected, where the power of the Bank of England is not comparable to that. So there is drama aplenty over there, and this is what their wonderful pro-growth plan did. Just drove the bottom out of the British pound, as I told you, down to $1.03 US. Recovered a little bit now, but interest rates on those gilts are still sitting at pretty high levels. So there's more trouble to come there. So he's having to undo a lot of the stuff they've announced. And what's happened now is that the parliamentary party, the parliamentary part of the Conservative Party, which was pretty much split over the two candidates. There was the support Dishy Rishi, as he was nicknamed, a very wealthy and highly educated gentleman. That was a big part of it. It was probably more like 55-45 the vote, so it wasn't a blowout for Liz by any means. And the parliamentarians who were voting for Rishi are very unhappy about it. She is now facing a battle to survive as the parliamentarians demand more U-turns to restore market confidence in the government. She's insisted there'll not be spending cuts, and reducing taxes can help boost economic activity. This was very much a Reagan type of idea, but I mean, it's in a mess. Really, it's in a mess. And if you look at the 19% tax rate, the corporate tax rate, they're obviously never going to get enough money in to do what they need to do, which is to get that debt under control. So there's massive troubles sitting all over the place there. So in that interview, it was interesting. I talk very occasionally about crypto, but we're all aware of it there. And Demon called it a decentralized Ponzi scheme in his address to Congress. Isn't that fabulous? And I understand that. But he's interesting to hear a guy with that depth of knowledge across both sides of the aisle talking. But he's decided runaway inflation. And of course, today we got confirmation of how bad that still is. Interest rates shooting up more than expected. Today's CPI number pretty well guaranteed a 0.75 rise in the US interest rates, which is, it's being felt everywhere. Same things happening in Australia, New Zealand, everywhere else. What's the old saying? The US economy sneezes and the rest of the world catches a cold. So average mortgage payments here have gone up about $700, $800 a month for the average house. And we've had this massive, unrealistic boom in property prices. And that's another bubble that's going to have to be sorted out. So Demon said that the Fed waited far too long and did too little. And his main emphasis, as I've already told you, was on the war in Ukraine. So here's the fear. So the core inflation went to a 40-year high today. Almost guarantees a big Fed hike. Prices excluding food and energy, I hate the way they do this. They define the thing so it's shackles at both ends. But excuse me, excluding food and energy increased 6.6% in the year. Shelter, food, and medical care contribute most, but it is a broad rise, and that's why I've attached this chart here for you to see that it's not just a spike, and it's not transitory. The history of our world tells us that once inflation gets a grip, it's very, very hard to move. And Volcker taught us decades ago that you need pretty drastic action. And the Fed is aware of that. And as Jamie Dimon said, we wish them luck in getting it under control a little bit, because it certainly is rampant at the moment. And don't forget that inflation is a tax on all of us. Every day, domestic inflation is, in my view, at least double what the trimmed figures are. In fact, interestingly, in about June last year, at one of our webinars, I said to you, household inflation, I've calculated, was running at 14% here in Australia. And up to that time, no one had mentioned inflation for years and years and years. And the very next day, I read 6 or 7 newspapers and financial websites to make sure I'm across everything that's happening. And the very next day, there were 4 or 5 articles on inflation. And that was sort of in this sort of area here when I said that. And look where it is now. And guess what, folks? There's probably more to come. This is a very important chart for you to see. This is my long-term US T-bonds chart. Every bar here is 24 days. This is really, really long-term. You can see right at the beginning of it that big gap down. That was when Volcker, who was a president of the Fed, put interest rates up to 20%, and that knocked the pants out of inflation. Look where we are here. These lines, if you look at the red diagonal line across, that's the mean or the median of the Danielcode trading channel, which has defined this market so well. I stopped moving that in July 2016. Ever since, that has just been doing its own thing with wherever those numbers were at the time. And at the time, they were holding the highs, limiting the highs and holding the lows on 1, then 2 standard deviations. Look where we are now, 1, 2, 3, 4 standard deviations. I showed you this before. It dropped out of the 3rd standard deviation. These are not your normal mathematical deviations, incidentally, folks. If you're trying to duplicate this, these are the Danielcode standard deviations. And I put a number on there where I said, I think this is where it's going to finish up at least on the present move, at 125.10. Well, I put the Danielcode ratios on there now for you from the high to the low. And there is a Danielcode ratio at 124, correct 20. Those little arrowheads are called corrects. 124.20, and the market is fighting desperately to hold that level. But the next level down, 1, 2, 3, 4, 5 standard deviations from the mean. It sounds impossible, doesn't it? It's around 113. 113.21 to 114 odd. I put an estimate on there, my own estimate of 114.21, but that varies subject to time. All angles have 2 qualities, both price and time. But any of your guys who are sitting on long-term investments in bonds, it's crazy. What's really interesting when you consider what's happened with these gilts in the UK is that with the rise in interest rates, the pension plan guys in particular, BlackRock was one of the biggest, they were not just holding money for the pensions, they were doing a little bit of investing, but more than investing in their gilts, their returns weren't good enough, so they were pumping up with a bit of leverage. In other words, they were trading futures off-market, or maybe on-market as well, but mainly off-market. And of course, they didn't put a stop loss on. How often have you heard this? So the way they're structured, when interest rates go up, they have to pay out a lot of money on margin. When interest rates go down, they get a bit of money. But we've been in a close enough to a zero interest rate environment for a decade. What made them think interest rates were going to go down further? And who talked them into it? Was it BlackRock? Was it JP Morgan, who are also big players? Whatever. That's what happens if you don't put a stop loss on. You're not trading, you're having a bet. So I've repeated this wonderful email from Greg Paladini because I know that a lot of you didn't quite get in the door when I started. And I want you to be aware of the enormous contribution Greg is making to Danielcode members by sharing with us his progress of Danielcode, his Danielcode tutorial, which is his second Danielcode tutorial. And he came back to me last year, did his first tutorial in 2016, came back last year to learn especially trading time. And he's shared those with us. You can go to the forum at the Danielcode website and you'll see his thread there, which is Daniel Training Commentary or something like that. And he's been commenting on what he's learned from the tutorial about trading time and the results he's been seeing from it. He's extremely generous to share this with us. And Greg, we are, all of us, most grateful for your kindness. And of course, he's a smart guy. He's a very, very good trader as well as being a wealth fund manager. Okay, what about this, folks? The magic micro targets on the S&P 6-day chart. At our last webinar a fortnight ago, as Greg, the other Greg from Colorado Springs and Texas, his son is intrigued with the word a fortnight. He'd never heard it before. So fortnight is a 2 weeks expression we use a lot here, not so common in the States. But in the middle of yesterday's drama, I was looking at the micro charts. And those of you who attend regularly will remember at the last tutorial and the one before, I started to show you these micro charts. So what's basically happening is that the Danielcode ratios theoretically go from 0 to infinity. The good news is that markets select the same 5 patterns almost all the time, up there in the 92-94% range. And they're the numbers we put on the members' charts for you, because I'm well aware that there are some of you, not all of you, but some of you who say too many lines, too many lines. So when we start off with the new trend, there are very, very few lines. There's just 6 Danielcode lines. Every swing thereafter is creating new Danielcode targets. And you finish up with some of these markets that have been in long-term trends. You got so many lines on them that, as a friend of Gig said once, well, you know, if you put enough lines on, one of them will be sure to be hit. That's the 500 monkey theory. Well, that's not the point at all. Those of you who understand, it's not the numbers that matter. It's what the charts do at the numbers that matter, their behavior at the micro numbers. And I'm looking at that. I've got micro numbers for all of the charts, but the equities, I have to tell you, are the most important. This was the 6-day chart, which I haven't shown to you before, because having made a presentation of the micro numbers a fortnight ago and 3 weeks before that, I haven't had one single inquiry about the micro numbers. Not one person has written to say, I need to know that. So I assume that you all think you are at a level of knowledge that you are happy with, and you don't wish to go any further. But you're missing a great deal. Remember this, the Danielcode has had one man's mind applied to it for 30 years. That's it. To really find out the other marvels that the Danielcode will have, you need 500 minds for 50 years. I don't have a grab on all knowledge. In fact, very little knowledge. But every day I sit here thinking about the Danielcode, and I'm finding out new things about it all the time. The Danielcode now is very different to what it was 5 years ago, and pretty fabulous. So if you thought yesterday was drama, and I'll tell you what happened. Basically, just below our black line, the Danielcode black line on the S&P has been sitting, as soon as I open this chart, has been sitting at 35.99.0. That was the black line, and I posted about it during the week. It actually closed below that number on Wednesday, which moves the percentages hugely in favor of taking out the swing, which wasn't far away. But those of you who understand what I'm talking about, we had the same thing with gold last year, and it was a long way away. It was a brilliant trade for you all. There was an absolute wall of options at 3,600, just below our black line, one tick below, 1 point below, I should say. And that's what caused all the turmoil yesterday. The market charged down into a level where those options were in play. They were good, value good. So there was a whole lot of closing out of options. And as the market started to rally, there were a whole lot of options players who had to buy. That's the basic reading of what happened today. For me, I know our cousins who trade options turn themselves inside out trying to find detail and direction, and looking at this chart and that chart and the other. You don't have to do it. The Danielcode does it all for you. This is the 6-day chart of the S&P. This is the micro chart. You know how these work because I've told you about them. Look where that support was. 3503.20 on 125, I should say. 3503.25 from one extension, 3503.50 from the other. 1.25 to 1.5 variance. With a number in the 3000s, we allow 0.1% variance, as you know, which is 3.3 or 3.5 points in this case. Look where it found it. 1 point away, 1.25 points away. Amazing, isn't it? I can tell you I was very, very interested when this market just broke through and then started to reverse, because fast moves come from false breaks, and that's essentially what you had here. But the way it bounced off 3503 had you salivating if you had known about it. So it's interesting. Not one person contacted me to say, I really need to know about that. I need to up my game. I need to finesse my trading skills. So if any of you do want to, let me know. We have a couple of vacancies available later this month for tutorials. You should learn this stuff. It's for your own good. You won't learn it otherwise. Nowhere else will you see this level of accuracy and precision. Okay, look what we did during the week, folks. It's been an absolute mozza for our Forex players. And don't forget, we started off life as a Forex company, and we have a lot of people who trade Forex. Look at this thing. Absolutely amazing. We've been short this thing for days and days and days. It got down to the 61, 67, plus a few ticks, and I mean a few ticks, turned around and roared. That was a TO3 buy signal. In fact, I can give you a short summary of it. Today, we had 4 buy signals in Forex. All of them were elected, and all of them are profitable. Yesterday, we had 1, 2, 3, 4, 5 Forex signals. 3 of them were elected, and all are profitable. In futures, today we had 1, 2, 3, 4, 5, 6, 7, 8 signals. 1, 2, 3, 4, 6 of them are elected, and 5 of them are profitable. Sugar's the one that isn't. It's a bit of a sideways correction there. Wonderful stuff, isn't it? Big money. What about the flip me signal in coffee? We had a buy on Monday for coffee, TO3 buy, which was elected and then flipped me. You should remember I've talked to you about this in a number of these tutorials. It's now worth $5,000, the flip me trade in coffee. Nice stuff, isn't it? So it's all here. If you want that knowledge, I'm more than happy to teach you. Send me an email and we can get you organized pretty quickly. This is the Euro JPY TO3 buy signal 2 days ago, straight up. Lovely. Here's the GBP JPY signal. TO3 yesterday was elected. What happened today? Whoosh, even better. Here's the GBP USD. What happened here? TO3 buy signal today, straight up. Lots of money, nice stuff. Here's the Euro USD, TO3 buy signal. We were short for 4 days going down. Long today. We've got a bit of a hiccup day before yesterday. Nothing dramatic. Long today. Wonderful stuff. And look at this one. This was our sell in the US dollar index. Can you believe how accurate this stuff is? I mean, the Wednesday's high is 113,495. Where was that red line? 113,510. Nothing, not even a hair the difference. And of course, that's that target recognition is the very first thing you need to create a price signal. So that created it. Short today. Nice trade. See what else I've got for you in the goodie basket. Well, here is today's S&P. We've talked about that, haven't we? But you see on this chart, there's no number for the bottom, but we had the micro number on the 6-day chart. And on the daily chart, we had the micro number as well. But nobody wanted to learn how to create those micro numbers. And you should. You should be like Greg. Come back, do another tutorial. If you think you've done a tutorial, get up to date, learn about time trading, learn about micro targets. It is quite amazing. I spend so much time on this stuff. I love it. I had one of my clients on the continent. They're asleep now, of course, otherwise he would be here. He was so excited. He's a wealth fund manager in Brussels. And he trades Germany stacks for a pretty substantial syndicate. And boy, they had a lot of money on the DAX today for its Danielcode TO3 buy signal and got the reward, which is fantastic. Have a look at the Russell 2000. I've been telling you all year that it's a better trading market. Its signals are much clearer than the S&P. In fact, the great secret, if you want to know it, is that the more commentary in CNBC, Bloomberg, what have you, the more commentary there is on markets, the less effective or the more difficult it is to trade them, because you've got these endless cross currents with the short-term traders being twisted one way, then the other, then the other. But have a look at this Russell market for today. I've been telling you about it. So, of course, we had a correlated buy, because today we had buy signals in the S&P and the NASDAQ. In fact, I've been setting you up for this pretty well all week. We had a buy for the Russell on Wednesday, and I want to make sure you got it. So the NASDAQ trade was exciting today, is the best word for it. Don't forget there's a carry forward silver buy from today. It might get elected tonight. Keep your eye on silver. Anyway, so the low of this particular bar here today was 1643.8. Where's the Danielcode blue line? 1644.1. That's 3 ticks variance, folks. That's not even a human hair. That's like nothing. The allowable variance is 1.7, 1.8 points. It is 3 ticks. That's how accurate that hit. Wonderful stuff, wasn't it? Hope you were trading it. If you haven't or weren't or would like to learn this stuff, do let me know, and consider taking the Danielcode trading tutorials. The only way you'll learn this stuff. and the Daniel code is so different to every other method of trading. Only the Daniel code knows these numbers and where these turns come from. We've reduced the price of our tutorial, which is normally $7,500, to let you take different sections of it for a bit less money, because I know money's tight. $4,500 to time, learn how to trade time, and $4,500 the same, how to trade price. If you have the money, do the complete tutorial. We've talked today about time signals with Greg Paladini. I've shown you what happened with the price signals this week. If you can afford it, take the whole course and become an expert on trading. It sounds like there's a lot of numbers in there. I can promise you we do all the work for you. If you can count to 3 forward and back and tell red from blue, I can make you an elite trader, one of the very, very best traders in the world, as you see with what Greg has been kind enough to share with us. Remember, the business of trading futures and Forex is not to be right. The business of trading is making money. Being right, of course, and having the Daniel code knowledge, whenever you know something that the rest of the world doesn't know, you're in a very, very privileged position. If you haven't already, folks, please go ahead and take a free trial. Go to www.thedanielcode.com. Just click the register button, follow the prompts. If you've already had previously had a free trial with the Daniel code, the website will probably remember you and won't want to give you another free trial. That's just a function of how the data package works. You have that issue or any other issue, contact Terry at support@thedanielcode.com, and he will make sure that you are connected straight away. And finally, folks, we have to show you our disclaimer. Very important. Let me tell you, it is really easy to lose money trading futures and Forex if you don't know what you're doing. It is also equally easy to make masses of money once you've learnt how to trade properly. So don't, please, I beg of you, I hate to see people lose their money through stupidity or ignorance. Once you know this stuff, it is so clear, it is so simple, it's hard to believe that you were in a position where you were regularly losing money. But the reality is 90% of traders lose their first bank in 60 days. I think it's shorter than that. But that's because they haven't learned. And it's the one thing you can't learn from the internet. So stop wasting your time, put your efforts into a Daniel code tutorial, and I will make you a super trader like Greg Paladini and a whole lot of our other clients who've done the Daniel code tutorials. So that's it for me for today, folks. Vicky's joined us. Nice to see you with us. I'm sorry that I didn't catch you on the first run through, Vicky. So Jimmy enjoyed that. I'll be talking to you in an hour or so, Jimmy. Greg says, I no longer take a trade without a time signal. Learn the Daniel code, sim trade, start small with micros if necessary, and scale up to build your wealth while the great unwashed struggle. I'll add a few more thoughts in the forum. Boy, I love that. I love that. Thank you, Greg. Yes, the great unwashed are destined never to get the idea, or they might even be silly enough to start trading options. Not a chance of winning. Okay, that's it, folks. I'm off duty for the weekend. My daughter's coming up from Sydney to spend the weekend with us. We haven't seen her for a long while, so that will be really nice. Enjoy your weekend. Make sure you follow all the carry forward signals. We had very few signals for today because we've already put them all out there. We've just been out there and collected, but I do think keep an eye on silver. Okay, all the best. I'll look forward to talking to you at our next webinar. Any particular subjects you'd like me to cover at the webinar, please send me an email. If you'd like to do a Daniel code tutorial and become a super trader, send me an email, jneedham@thedanielcode.com, jneedham@thedanielcode.com, and I will be delighted to make you one of the elite super traders. All the best for now, and bye-bye, folks.